Welcome, dear traders. Last week, Atlanta Fed President Raphael Bostic made some comments that spurred optimism in the stock market. He hinted at the possibility of a pause in the tightening cycle in September. Naturally, stocks went up amid such news. However, this week, the situation is the opposite. The equity market is again grabbed by fears of galloping inflation and a recession. Stocks will remain in the red as long as inflation is up and the Fed raises the interest rate. Analysts are trying to figure out when the situation may change for the better. Some of them suggest that inflation has already reached its peak. They stress that a recession looks extremely unlikely given the almost full employment in the labor market, stable consumer spending, and a gradually expanding economy. The consumer price index decreased very slightly to 8.3% in April from a 41-year high of 8.5% in March. However, it was the start. Oddly enough, investors' reaction to the strong manufacturing PMI index was rather negative. The figure rose to 56.1 in May from 55.4 in April. On Wall Street, there was a new wave of a sell-off following this data. All three major indexes shed about 0.5% on June 1. US stock futures continued to fall today. Asian stock markets also declining. The fact is that traders fear that the Fed's monetary policy tightening is unlikely to withstand the looming crisis. Morgan CEO Jamie Dimon warned investors of an economic hurricane as the economy struggles against an unprecedented combination of challenges. Economists note that in order to avoid the crisis, there should be a decrease in consumer spending. So far, the Fed has not been able to achieve it. Besides, the regulator plans to undertake a series of key rate hikes. So the likelihood of a pause in the tightening cycle in September looks very unlikely. Given the current economic situation in the United States, analysts consider the Fed's tools in fighting inflation ineffective. They are less confident in the regulator's decisions. The main risk persists. In addition, the yield on the 10-year Treasury note is climbing again. On a Wednesday, it reached a two-week high of 2.95%. The US dollar index has been growing for two consecutive sessions amid rising Treasury yields. Yet, in the Asian session, it dipped slightly to 120.25. The euro, one of the main rivals of the US dollar in a basket, is now weak due to record high inflation in the Eurozone. It lost momentum against the greenback. The US dollar edged higher amid the comments of another Fed policymaker. Fed Governor Christopher Waller said he wants to keep rising interest rates by 50 basis points until inflation approaches the 2% target. And thus the greenback's rally is hardly surprising given the cornucopia of bullish factors. However, in the Asian session, the US dollar index slowed down, moving in the downward intraday channel of 102.21 and 102.62. Meanwhile, the Bank of Japan sticks to its ultra-loose monetary policy, whereas major central banks are trying to cap soaring inflation. The Bank of Japan believes that it's too early to tighten monetary policy. The regulator pinpoints that the country is now only halfway to meeting its price target. Although the central bank is going against the global trend, a dovish policy is working. The country's economy is gaining momentum. Exports are up. Consumer spending on services is showing signs of improvement. Yet the yen remains weak versus the US dollar due to the widening rate gap between the Fed and the Bank of Japan. Apart from that, US treasuries are growing while Japanese government bond yields are near zero. In the early Asian trade, the dollar-yen pair even reached a 3-week high of 130.23. However, later the US dollar moved to consolidation and the pair declined. At the time of preparing material for this video, it fell to the level of 129.85, moving down in the range of 129.75 and 130.24. While the yen is losing steam, the Aussie, on the contrary, is holding ground against the US dollar. The Aussie maintains a bullish bias amid rising commodity prices. Australia exports commodities in big volumes. Apart from that, GDP data turned out to be strong. The trade balance report published today was also upbeat. Australia's trade surplus increased to 10.5 billion in April from 9.31 billion in the previous months. As the result, the Aussie is strong amid positive fundamental factors. Next Tuesday, the Reserve Bank of Australia is expected to hike the key rate, and this is also bullish for the Australian currency. However, in the AUD-USD pair, the US dollar is still dominating. What's more, the Aussie is sensitive to risk sentiment. In the Asian session, the pair climbed. It was fluctuating in the intraday range of 0.7141 and 0.7200 amid the consolidation of the US dollar. At the time of preparing material for this video, the AUD-USD pair had already reached 0.7197. And that's all for now. Keep close tabs on market developments with the InstaForex TV channel. Feel free to leave your feedback and see you soon.